Hello, I'm Nimhara, and in this presentation, me and my team with Iona and Shaista will be presenting the planning audit of accounts receivables at Molly Mart. Hi, I'm Nimhara, and I'll be talking about the risks to the completeness assertion found at Molly Mart for this year's audit. The completeness assertion is the concept of making sure that all financial transactions and events that should be recorded have actually been recorded. In order to do that, we need to make sure that we do the following: obtaining a list of invoices to identify any missing invoices, then conducting an investigation for any missing invoice, such as checking backup documentation and talking to the sales staff about the same. At Molly Mart, it was found out that invoices from 62 to 92 have been missing. The next slide is a visualization of the orders including the missing sales invoices at Molly Mart. The following chart shows the number of orders for every day of the month of July in the year 2022. It is assumed that the particular breakdown of the generator on the 3rd of July was not noticed, and therefore the sales for this date were not manually entered into the financial system. As there is at least 1 day's worth of missing orders, therefore the completeness assertion of the accounts receivable is at risk, showing an incorrect representation of the accounts at Molly Mart. As a follow-up to the audit, it's best for me to make sure that we tick off the following: examining backup generator. Evaluate how frequently malfunctions occur and decide whether maintenance or repairs are necessary to reduce the likelihood of them happening in the future. Second, examine manual entries. Verify that all manual sales entries are incorporated in the system by looking over data from days when there were malfunctions. Third, sample testing. On breakdown days, carry out sample testing to make sure they are documented to follow the sales sheet from those days to the accounts receivables ledger. Finally, put sequential entry into practice. Create a process that mandates that all accounting system entries be made in a sequential manner, flagging any sales that are missing. This will encourage accurate statements and reduce risk, building a trustworthy audit, helping all investors to rely on the financial statements.
Hello, I'm Iona, and I will be discussing the risks to the existence assertion found at Molly Mart during this year's audit planning. Per our report, the existence assertion confirms that every asset, liability, and equity item listed on a balance sheet truly exists, and there are not any fictitious transactions or overstated accounts. In order to do this, we plan to test sales invoices and shipping records for any fictitious debtors and confirm that there are not fictitious transactions or overstated balances. In the data of Molly Mart, suspicious debtor sample company A was found in the listing of accounts receivable. Based on the name, this is unlikely to be a real customer. Here is an extract from the accounts receivable data provided to us, showing the presence of this suspicious debtor. For the remainder of the audit, we need to conduct inquiries with management and Larry to confirm whether sample company A is a real company or just a test debtor. We also need to complete positive form
Hi, I am Shaista and I'm discussing the risk to the accuracy, evaluation, and allocation assertion found at Molly Mart record in this year's audit planning. Accuracy, evaluation, and allocation. In this assertion, an amount related to transaction recorded in a correct amount. The monetary value attributed to account receivable is valued and recorded correctly. The classification of transaction entered appropriately and should be relevant to correct invoices and account of clients. This table is showing dramatic increase and decrease based on average pricing and sales of few items. One of the items, which is called China cabinet, was sold for $34,560, but the average pricing excluding this error is $2,131, which can be concerning for accuracy, evaluation, and allocation assertion. Dramatic sales fluctuation at Molly Mart record can raise concern for auditor in accuracy, evaluation, and allocation. We have to consider the following step for follow-up. In accuracy, verify sales figure match with actual transaction, spotting potential error. In evaluation, we have to assess if reported inventory or sales values are correct as per a price change can impact financial statement. In allocation, we have to ensure sales revenue or expense are appropriately assigned to items or categories, potentially adjusting for accuracy. We as auditors should closely examine this fluctuation, investigating reasons and recommending adjustment to maintain financial statement integrity with management and Larry.